Hello, and welcome to myfinanceteacher.org. In this video, I'm going to have a repeated look at Sandstorm. The reason for that is because I need to issue some correction over here to the post from the 1st of February, specifically in relation to the royalty ounces that Sandstorm has. The reason for the correction is that when you look at the portfolio of royalties, for example, over here looking at the producing mines, and selecting specifically precious metals, it actually hides a lot of the mines that shouldn't be hidden. In other words, this list that you see on the screen right now is not a full list of mines that produce gold and silver. So there is a bit of a glitch on the company website, leading to today's correction on Sandstorm's royalty ounces. Unlike, say, Franco-Nevada or Wheaton Precious Metals, unfortunately Sandstorm doesn't clearly report their total royalty ounces, which is basically the amount of ounces that the royalty company might expect to receive from their royalty and streamers. So I had to manually go through producing and developing mines to add up all of the royalty ounces based on the terms of these royalties and streamers. The resulting reserves and resources, just like when we look at miners as well, do not actually include the reserves and resources of the exploration projects. So I've only added up the producing and developing mines here. Now let's jump into the presentation. As usual, the valuation factors included are the gold price, the amount of royalty ounces the company might expect to receive, the cash costs of those ounces, company's long-term debts. We also take into account the time value of money with a discount rate of only 3%, which is below the 5% that I usually apply for gold miners, as perhaps royalty companies with their, in this case, 200 royalty agreements might have somewhat lower risks with such a diversified portfolio of precious metals as well as other resources. And of course, we'll look at the value per share, including a secret sauce on insider shares. All of this data you can confirm yourself by looking at the assets portfolio on the company's website, the annual report for 2020, and Yahoo Finance. As usual, I'm going to have a look at three scenarios: balanced, conservative, and optimistic, with a balanced scenario including the gold price 2% below the ongoing spot price, that's only 1787. The conservative scenario is 10% below that at 1608, and the optimistic scenario is only 10% above the balanced scenario at only 1965. Perhaps you might argue that the optimistic scenario is not as optimistic as it should be. As I mentioned many times, in the long term, I am bullish on gold price, and I see gold far above $2,000, say, over the next couple of years. Next, looking at proven and probable reserves, that's from 17 producing and 19 developing mines. We're going to have a look at gold equivalent ounces with a gold-silver ratio of a very high 80. Such a high ratio actually underestimates these reserves a little bit, which are at about 691,000 of gold equivalent ounces, and exclusive measured and indicated resources, which are also based on the same producing and developing mines, and also are in gold equivalent ounces, are at about 525,000 ounces. And those ounces in 2020 were acquired at an average cash cost of $269 per ounce. The company has reduced already relatively low long-term debts down to only $2.9 million, but at the same time they've printed a bit more shares, which increased to 195.25 million shares, with 1.28% of those shares staying in insider hands. As I mentioned, we'll look at the time value of money with a discount rate of 3%, and the reserve mine life, that's based on the proven and probable reserves and annual ounces sold in 2020. That gives you a mine life of around 13 years for the royalty ounces that the company would expect to receive. And the resource mine life, that's including proven and probable reserves as well as measured and indicated resources, would be 18 years. All of that would give you a conservative estimation. That's if you know what really hits the fan and gold price, say, drops down to 1600 and stays there for, say, over the next 1 or 2 years. Plus, the conservative valuation only looks at the proven and probable reserves, throwing out any measured and indicated resources, never mind inferred resources. So that gives you a conservative valuation of just around $3.9 per share, which is quite a bit below the market price of $6.49. The balanced valuation, gold price 1787 as I mentioned, and even in the balanced valuation we only look at the proven and probable reserves of those royalty ounces, which means again we don't count any measured and indicated resources, never mind inferred resources, and that gives you a valuation of only $4.39, which is still below the market price of $6.49. But perhaps you might argue here that you wouldn't expect gold price to stay under 1800 over the next couple of years. Perhaps there is an argument here. And finally, moving into the optimistic valuation, which again might not be optimistic enough because it only plugs in the price of 1965 per ounce of gold, and it looks at proven and probable reserves as well as only half of measured and indicated resource. So even in optimistic scenario, we are leaning quite a bit into the conservative side. In either case, that gives you a valuation of $6.33, which is pretty close to the ongoing market price at the moment. Next, let's have a look at the highlights. As I reported last time, the company has quite an extensive royalty portfolio, including over 200 assets, out of which there are 21 development projects in precious metals, with more than half of those in very attractive jurisdictions. So same for exploration assets. There are 28 precious metals related exploration assets, with half of them in very attractive jurisdictions. And besides precious metals, the company also has a lot of diamond and copper reserves. And lastly, I want to have a look at the charts showing the relationship between the share price of Sandstorm, that's the blue line over here, and the gold price, the purple line. The reason I want to have a look at this relationship is because I'm curious what would be a really optimistic scenario for this share price if gold price averages, say, somewhere at about only 2200 over the next 1 or 2 years. So looking at this performance over the last 4 years, since the December 2016 low in gold price, gold has actually increased by around 60%, whereas at the same time the share price of Sandstorm has increased by around 98%. Again, let's be a little bit conservative over here and say Sandstorm share price outperforms gold price by a factor of, say, 1.4. Let's zoom in a little bit to see if that factor is quite different in more recent times. Since the summer 2018 lows in gold, gold has increased by around 54%, and at the same time the share price of Sandstorm increased by about 81%. So somewhat similar, let's say a factor of 1.4% outperformance. In that case, if gold price averages somewhere around 2200, say, over the next couple of years, that's somewhere about 22% above the ongoing market price. A factor of 1.4 would give you about a 30% appreciation in the share price of Sandstorm. And from the current market price, that's an appreciation up towards about $8.50 per share, which perhaps would be a more truly optimistic scenario for Sandstorm. But don't take it as an investment advice. There are a lot of factors at play over here, one of which is, say, dilution by the management. Over the last 3 months, for example, the company has issued 2 or 3 million shares. So just like everywhere, there are potential gains, but at the same time, there are risks involved as well. And that concludes the video. Let me know what you think in the comments. For now, I wish you a productive Tuesday and good luck in your trades.